I'm here with Steve Cooper, my awesome lender from Go Prime Mortgage, to answer 10 Mythbuster questions for you today. So, are you ready?
Ready as I'll ever be.
Okay, the very first one, and I hear this all the time. If I start shopping rates from different lenders, it's going to tank my credit score. Tell me about that one.
Yeah, that's definitely a myth. Most lenders now start with a soft credit report anyway. So we'll have every lender uses your middle credit score, middle of the three. If it's a joint application, the lower middle of the three. And then we'll base your initial interest rate on that quote along with your debt ratio and everything else. So we don't need to pull your hard credit. So your score is not impacted. Actually, when we pull the soft credit, it doesn't even show up.
Okay, so you could go to 5 different lenders.
In theory, you could, but I wouldn't do that because you're wasting a lot of time. Because you could basically go to one, let them tell you your score, and then just tell the other lenders, hey, my score is 750. So I don't have to have everybody pull it, have to do 5 applications. You know what I mean?
Yep, I love that.
Save them a lot of time, save the lenders a lot of time if they're not going to end up using them, that sort of thing.
I love it. So that was busted. The next one is the lowest rate is always the best deal when you're talking about loan programs. Would you say that's true
That's
or
definitely not true. Definitely not true. I mean, everybody wants the best deal, but the best deal for each individual can be different than just the lowest rate. Lowest rate's great, but there are circumstances where you might want to take a higher rate and less closing costs. Maybe if you're going to pay the loan off in 6 months when you sell your other house or come into some funds some way or another, you don't want to pay $4 or $5 grand in closing costs just to get a low rate that you're going to keep for 6 months.
right?
So you could bump the rate up a little bit, have the lender pay your closing costs, and end up better off in the long run. If you're going to pay the loan off pretty soon.
It's very specific on your situation.
Everything's specific on your situation.
So talking to a great lender is what's going to help you determine the best program for you and not to focus just on the best deal.
Absolutely.
Busted! So here's the next Mythbusters question. The higher interest rate always means a higher payment.
I would say that's definitely true. I don't know how it wouldn't be a higher payment if the rate was higher. Unless it's, well, yeah, I mean, all things being equal, if it's a 30-year fix, if the rate's higher, the payment's going to be higher. I'm not sure if I'm answering the question, or maybe I'm misunderstanding the question.
I just threw you off because I finally gave you a confirmed.
Oh, okay. True, that is true, that's right. Higher interest rate, higher payment, in general, yes.
In general.
That's right.
Perfect. The next question is, online lenders always have better rates. And let me just tell you, I hear this all the time. And when I see somebody who went to an online lender to get pre-approved, it makes me have pause. But tell me your thoughts.
I'm sure there are some great online lenders, but the main thing is a lot of the ones that I see, they'll send me the quote from whatever online lender they may have went to. And a lot of times they might have a lower rate quote because that's all the client knows to ask for. Hey, what's the rate? That's the magic question. But they almost always have, they're charging discount points or higher junk fees or things that make it to where the rates, they're almost buying the rate down and they don't even know it, right? So
right.
If the online lender says, hey, I can get you 6% and we're at 6.25%, they need to look at the fees to make sure they're actually getting 6.25%. It's an apples and apples comparison.
Right.
So I have them send me their quote, and if it's great, great. If lock it, but if it's not, we'll explain it and figure out why we can beat it.
It's never great because it's always a struggle to get to the finish line with online lenders.
Yes. Because
you are calling into a call center. You don't have someone on your side helping hold your hand through the process. If something goes bump in the night, that nobody takes accountability. And they don't have the same sense of urgency as a local trusted lending advisor.
I would say to that too is that, yeah, you're right. All those things are correct. And they have no incentive to keep you happy because they're not going to ever do another deal with you, the online lender. Whereas me, if you and I work together all the time, everyone's important in the future too. So your satisfaction is always important to me just as much as it is the client itself.
Good point.
Right.
Can we say busted?
Busted.
Busted! Okay, so the next one, let's see here. Your credit has to be practically perfect to get approved.
Not even close. No, you can, I mean, there are a bunch of different loan programs that will allow lower credit scores, some lower than 580 or even lower. There's just been some changes recently where credit score, DU, Fannie Mae's underwriting engine won't even require a minimum credit score.
Oh my.
Brand new. We'll see how that works out, rate adjustments and things like that. But no, the credit score, we do deals all the time for people that have less than perfect credit, former bankruptcies, former foreclosure, whatever. The credit score can play into, depending on the loan product or program, the interest rate can vary based on credit score, but the approval, you can absolutely get an approval at 620 like you can at 760. Just might have a little different terms.
And then I would add that to work on your credit score, because that does typically give you the best loan product, the higher your credit score.
It definitely matters for sure.
Right. So is that busted?
Busted.
Busted! Okay, next. You don't need 20% down to buy a house.
Yes, you do not need 20% down to buy a house, absolutely. You can do as much as 0 or as little as 0% down. USDA, there are down payment assistance programs with FHA and through North Carolina Housing Finance Agency. 20% is great because it'll help you not have private mortgage insurance in your payment if it's a conventional loan. But in general, that's an old, was it wives' tale, whatever it is?
Mm-hmm.
From
50
the
years
olden
ago.
Days? Yeah, 40, 50 years ago, you had to have 20%. Now, I'd say over half of the deals we do not have 20%. Confirmed, you do not need, that's right.
Okay, so here's question 9. You can't get a mortgage if you just changed your job. Is that true or false?
That is false. You can absolutely still get a mortgage, depending on the type of job that you have, really more so your new job than your previous job. As long as the job that you're going into is a salary position or has some kind of guaranteed income, like a 40 hours a week flat, whatever, we can count that income right away if there was no job gap, if you're leaving one job and pretty much going straight into the other one in a week or two. If you are going from whatever job to a new job that's mostly commission, bonus, overtime, variable hours, different things that they can't specify how much you're going to make, self-employed obviously, then yes, you'll need potentially a 6 months to a year to even 2 years if it's self-employed to know what income to count. So unfortunately, you could be making $100 an hour at this new job, but your hours are going to fluctuate. Then they're going to make you wait over time so they can average how much income to count.
That makes sense. What happens if you change, it is a salaried position, but you change fields completely? Like you are in the medical field and then you switch to sales.
Well, sales, if it's a base plus commission.
Oh, that was a bad example.
Yeah, that's okay. If it's going to salaried income, this is just my opinion, but I don't think it matters if it's one field to a different one because it's still a guaranteed salary.
Okay.
I mean, if you were going from a Starbucks barista to an IBM CEO, they'd probably do some investigating on that and see how did you go from this career to that one and you quadrupled your income, whatever.
Right.
But in general, it's not a big deal.
Okay.
Salary's the king.
So that is busted. And now here's the last question. You shouldn't make large purchases such as buying a car or buying furniture on credit during the process of getting your loan.
Yes, that is, you should not, that is correct. Typically we tell them when I'm messing around with the customer, just talking to them, cutting up, it's just to buy the house and then the car. Once you close, you can pretty much do whatever you want to. But in general, yes, I've had people in the past that's, when we told them they were conditionally approved, they heard they were approved. And they went out and did these types of things, bought a new car, whatever the situation might be, bought furniture for the new house, whatever. And it used to be a bigger deal than it is now because we used to have to check credit all the way through to the finish line. In general, like for inquiries, for new, like if they open a new furniture account or whatever. But the short answer is you should not buy anything until after you close, just to be safe. You should not also deposit any money into your account until you close that's coming from wherever, just because that's something we have to scrutinize. And even if it's not something that's going to hurt your loan, it's going to be more paperwork. You're going to have to chase stuff.
Right.
So yeah, definitely don't make any big purchases. Even if you're thinking about buying a house next spring, don't do it now. Put everything off until you close and then get it.
And I always recommend to make sure that whatever you do, whether it's taking out large sums of money or depositing large sums of money or thinking about any kind of unusual purchase, to call the lender and just let them know and get their advice.
Yeah, transferring money is actually a big deal. Just to save yourself the headache of, even if it's all your money and you're transferring around between accounts, we're going to have to source all that to show where it came from. So if you need to do that kind of thing because you have money scattered in several accounts, do that ahead of time, say 3 months before you're going to buy. And that way when we get to the process and we're verifying the assets, it'll already be where it's going to be in one account.
Okay. So that is confirmed.
Confirmed, baby.
Okay, and I realized I missed one question, which is a pretty important one.
Okay.
Once you get the pre-approval, you're guaranteed to get to the finish line.
That is false. 100% false. The pre-approval is basically just a snapshot of what your situation is at that moment in time, credit score, income, and whatever. The pre-approval is an excellent thing to do before you even start looking at houses online, in my opinion, because not only do you want to make sure you can qualify for the loan you need to buy the house you're looking at, but you also want to make sure that you are comfortable with the payment that you're going to have to buy that house on whatever loan you need to get that house. So I always try to tell the clients right up front that even if you qualify, we always start with kind of the max of what they qualify for, and then we talk about what their personal budget is. And if their budget payment is much lower than what they qualify for, it doesn't matter what they qualify for. It matters how much can they buy to keep the payment where they want it to be. So we kind of lower it down to the threshold they're comfortable with and have them go essentially be pre-approved for that amount or slightly maybe more than that amount. So they can shop and then go from there. That way you're not looking at $800,000 when they want a $600,000 payment, right?
Yeah. Well, thank you so much,
Thank you,
Steve.
Jenny. I
This is
appreciate
awesome. I really appreciate you answering questions and playing this game.
All right, thanks so much.
Thanks.
Have a great day.